We want to turn our attention over to the economy. Many people who have been priced out of purchasing a home or making a move for years were paying close attention to the Fed's decision to cut interest rates by half a point. But will the Fed's rate cut make any difference for mortgage rates? And what about other factors that impact the housing market? Well, for more on this, I would like to bring into the conversation now Kirsten Jordan, a real estate expert. And Kirsten, good to see you. Thanks for joining us here. I guess the first question would really be, how should prospective buyers and sellers react to this rate cut?
That's the best question because as a buyer, I definitely think buyers need to be super knowledgeable about what they can afford and what's going on in their marketplace. Because the only way that a buyer right now can get into the market and buy and find good opportunity is to really have a really well versed understanding of what's going on in their specific local market. Because as you know, real estate is really location, it's localized. And then with regards to sellers also really need to understand what those buyers are looking for, because the other part of lowering these rates that we were hoping for is that sellers were going to come to the market and be ready to sell their homes because they think they can buy something else instead of being stuck with those really low rates that they feel like they can't trade out of.
So, Kirsten, with respect to this rate cut, is it going to impact mortgage rates at all?
We've already seen a slight impact in mortgage rates from this rate cut, but we already had seen mortgage rates come down because of the demand and because of the fact that there was this expectation of rates coming down that we've all been anticipating now for several months. I don't think it's going to make the hugest impact, but I do think that this is going to give banks that possibility to get things down further and closer to that six handle and potentially below. For relationship banking, I think this definitely gets a lot of buyers there under the 6% mark for 30-year fixed. And then obviously on the shorter term mortgages, which a lot of buyers are opting for these days, they could potentially be well into the fives.
So, speaking a little bit, let's talk about home affordability. If home prices do get much more expensive, how do you expect that to really affect the housing prices, the housing market, excuse me? And can people afford to buy a home or get out of that low rate mortgage?
Well, there's two parts to the question. Obviously, is are these rates going to enable people to be able to really buy and more importantly, as you're talking about pricing, are these rates coming down mean that all of a sudden housing prices are going to skyrocket again? The issue that we're having right now with housing prices is obviously it's a supply and demand. It's a basic economic principle, which is that there's a real lack of supply of affordable housing. And there's a couple of reasons for that. The reason that we're seeing that lack of supply for affordable housing is that that's the lower end of the market. That's where we get the most impact of people moving to the United States. As you know, tremendous amount of migration to the United States, and that affects the lower end of the market, which means also those who rent at the lower end are getting pushed further and further. And so that is where I think we're potentially going to see the biggest spike because they're really counting those pennies and watching those dollars to see what they can afford. And then obviously at the high end, I think we'll also see a big impact with pricing because as you know, the larger the mortgage, the larger a 1% rate cut over the course of the year can make a really big difference on those payments because all of a sudden, we're talking about potentially hundreds or thousands of dollars a month for certain buyers.
Kristen, let's talk now about the lock-in effect. What is that exactly, and how is it potentially hurting the housing market?
Well, this is what Powell was talking about, which is this idea of people being locked into a very low rate and that making them not want to move. This is something we've been experiencing. Obviously, as soon as rates started to really hike up in the end of 2022, 2023, we really saw people not want to move. That's when we started seeing an increased scarcity of quality housing inventory. You have sellers frequently saying, "But if I sell, where will I go?" And especially, not only empty nesters, but savvy individuals who purchased at that point when those rates were very low or they refinanced, really can't afford to make a jump to the larger home or even the smaller home that they need because of the fact that that jump could be between 3 or 4 percentage points. And for the median cost of a home, which is $422,000, the jump from a 3% to an 8% mortgage rate is as much as $10,000 a year at a minimum. So that's really been what we've been seeing is just that there's this everybody's just stuck in place not wanting to leave their low rate, which you can't blame them. Why would they want to change their cost of living any higher when inflation's already such a big deal for so many owners in the United States?
Jerome Powell also said that the Fed can cut rates, but it can't fix the housing crisis. So, what needs to happen for us to see things improve within the industry?
This is actually in a lot of ways a political question, and I am not super well versed in politics, but ultimately some kind of incentive to enable us to really stimulate building homes, stimulate builders, stimulate affordability is really what we need. And there's the conversation around the elimination of the $10,000 cap on SALT deductions. That's another kind of incentive potentially. I know Trump was proposing that, even though it was something that he originally put into place himself. But in general, even just in New York City, we see a tremendous amount of tax abatements for builders building new homes to enable them to be able to entice purchasers to buy, or even in situations where there's building affordable housing that they can find a way to do in a hybrid way, where maybe it's also around other kinds of housing or commercial space, so that you can really get more housing. Because right now the real issue is that we have a lack of inventory, and just dropping rates is not changing policy. That's just enabling people to potentially have a short window of time where they can afford a little bit more home.
Finally, Kirsten, what about the expectations? Should people still expect to be able to buy a home, or will the standard of buying versus renting change in the future?
We are really moving towards a rental generation. It's becoming extremely more difficult to buy, and there are so many large organizations, or just REITs and various large banking institutions that are buying up a lot of the affordable housing and turning it into rentals. And there are so many buyers out there who really are probably never going to be able to afford that primary home. And so I would say that this is really truly the biggest crisis that we have. And so if you're a buyer out there and you know that you can afford something right now, it probably makes sense to take a look and see if there's something that you really can't afford, and see if you can get in there. Because I anticipate that in this dance between inflation, the election, trying to make trying to make people happy by lowering rates, it's potentially that we could still see prices either is stabilize, and in some parts of the country go back up again.
Kristen Jordan, real estate expert, we appreciate your time here at Live Now from Fox to offer up your expertise on the housing market after the federal interest rate cut. Take care.